All right, let's take a look at this. As you can tell by the day we're trading here, it's a very, very flat doji type of day. One of the most difficult days to trade. These two white lines represent the day before's high and low. And you'll see those on the 5-minute chart and the 1-minute chart here on this side. These two white lines represents the high and low of the previous day on the 5-minute chart. And we got them on the 1-minute chart as well. So let's take a look at our opportunities here. All right, price had dropped below the high of yesterday, and it's in between the high and the low of yesterday. Now, depending on our bias for the week or whatever, if we're bullish on this uptrending daily candle chart, well, then we probably are looking for these patterns to take place somewhere on the bottom, preferably the low of the previous day, or as we get into the high of the previous day, we want it to take shape up here so we can have it kick up to the top. Or if it's going to short, we're looking for the pattern to take place here as we see. Let's take a look at this one right here. I think I see something. This is the 5-minute chart. Let me show you what I see here. Okay, we see it at the top. We see a short opportunity. This is the high of the previous day. The breaker block takes place as it creates an order block here, pushing up through the high of the previous day right here on this little candle right here. And then it comes down and sweeps it and breaks character to the downside, creating this fair value gap, which is from that candle to this candle. Let's take a look at that real quick. Right here is the fair value gap right there. And again, a fair value gap is an empty space of candle in relation to the previous candle and the after candle, giving you, there's no wicks in between here. But what does happen is price comes right back up to that and tests it where we can enter our short position. It does it twice. It comes up right here, we enter the short, stops above that fair value candle gap, and we write it down to however much we can get. That's how you do that. And that looks like that's the only trade, because that's 4 o'clock, right into the 4 o'clock p.m. Eastern time. And I don't see anything that we can take here down at the bottom necessarily, because there's no really fair value gaps created. We have a triple sell-off, and depending on what strategy you're using, this is a breaker block strategy, and it's not near the low or high of the previous day. And without looking at any other time charts, hourly, 4 hourly, we don't know if there's anything of significance right here. What we're doing is we're testing this with the high and low of previous day only at this point. Looking for the breaker block to develop either at the high or low, showing us either a short or long direction to take it. All right, and so this is the only thing we had here in the 5-minute chart on this particular day, and it worked perfectly. There's your fair value gap. Here's your sweep to the liquidity, break of structure. You might say, well, why didn't you take this one right here? This pivot down did not break the structure. It didn't come below this breaker block, right? You have to have a break of structure, and since this neither created a high or a new low, it neither created a higher high here or a lower low here, can be ignored. The next important pivot is the one that actually broke this low pivot right over here, right here. And having done that, it created a fair value gap, which actually tested positively for the short trade. All right, let's take a look at the 1-minute chart in the same area, because we don't see any breaker blocks over here in this area. The one on the bottom is not really very useful, or in a right area. It's not in the right area. It's not near the high or low of the previous day. Here we go over here, and we could take a look at this right here. This is a potential setup if we're only using this chart. Let's take a look at what it looks like here. We got a high above the previous day, comes back down and shoots up again and breaks the structure, right? So that's what we could be looking at, that without knowing this is going to happen over here, and we'd be looking for a fair value gap in this area right over here, all right? And it's very possible that we could have tried to take that short right here on this 1-minute chart. Let's look at it again real closely. Right here, as it comes up into that area on this particular candle right here, and tried to short that and been stopped out just for a small stop loss as it continues to go up. And if it does break this high where we thought was the breaker block stripe of liquidity, then we'll be looking at, well, maybe we didn't judge that right. Maybe this is actually the high. Let's move it around a little bit, because once one doesn't work and you're still looking for that sweep of liquidity at the top, we just sort of move our idea around a little bit here and go, okay, maybe this was it the whole time. And here's the sweep of liquidity instead of this little one. This is actually the sweep of liquidity. We need a break of this pivot, a break of structure, because these are invalid. And then we need a move back up into a fair value gap area, which is what these candles are right here. That's what we saw in the 5-minute chart. Beautiful setup right there, and it actually worked pretty good. Your stop loss is above the candle that created the fair value gap, so it's a small stop loss and probably a 4-to-1 return on that, and that's how you do it. So we're using the 5-minute and the 1-minute to see what we're missing on each chart and looking for the best setup. So yes, it doesn't always work, but we want to keep our risk very, very small when it doesn't work. And when it does work, here's another interesting place, but it's not really the breaker yet. So it depends though. You could probably draw the breaker. I don't want to make this video too long, but you could probably make that breaker like even right here. Let's take a look at it here. There's one right there. Okay, let's take a look at this. Supposed to go right here on this right here. I mean, the pattern is the same, and it happens in, you want it to take place around the high of the day, and this is a short or bearish particular pattern right here. Let's see if there was any fair value gaps created in this. Yep, there actually was. There's an empty space right there, and it did come up and test it, and it came right back down. Yep. Now, since this is kind of far above the high of the previous day, let's see what we got here. Well, if we're watching the 5-minute chart at the same time, it doesn't look as far as we thought it did, right? So this particular swipe of liquidity failed. This one actually worked, and we found an area up here on the 1-minute chart that we could have shorted, and we found another area right here on both the 5 and the 1-minute that we could have shorted, coming back down. All right, so again, right here, this little fair value gap could have been shorted down to the high of day. And we have the one that was created on the break of structure right here as it creates this empty space and comes back up to test it right here with a small stop loss. So it's there's a couple different ways that you could have done that. Anyway, that's it for the day. Let's go to the next day and see how it works.